Hello, everybody. This is Kimchi Crypto. Today, I'm going to talk about Microsoft. Is it buying Bitcoins this time? Let's dive in. There's an article about Microsoft weighs Bitcoin investment. December 10th of this year could be a pivotal moment. And another article here in Coindesk Microsoft, however, urges shareholders to vote against the proposal to assess Bitcoin as a diversification investment. The National Center for Public Policy Research, it's a relatively conservative think tank. They have notified shareholders of Microsoft that it intends to propose a Bitcoin diversification assessment at the company's annual meeting on December 10th. Why should Microsoft buy Bitcoin? It argues. NCPPR, they argue Microsoft needs to buy Bitcoin. Firstly, for diversification. Secondly, it's a hedge against inflation. That those are the two primary reasons. The board recommends, however, shareholders to vote against this proposal. The filing reveals, arguing that Microsoft already carefully considers this topic. You know, according to a company statement in opposition of the proposal, they, you know, the company board of directors in the Microsoft, they are in a opposition of buying Bitcoin. Why? They mentioned they've done it, they've studied it, but conclusion was we don't need it. Our financial status is well and healthy. We don't need bitcoins for this. And second, the price of Bitcoin is too much volatile. Surely understood. As the proposal itself notes, volatility is a factor to consider in evaluating cryptocurrency investments. For corporate treasury applications that require stable and predictable investment to ensure liquidity and operational funding. Microsoft already has strong and appropriate processes in place to manage and diversify its corporate treasury for long term benefits of shareholders. They are buying US treasuries already, so somebody says it's not necessary to buy bitcoins. And this requested public assessment is unwarranted. Whether to buy Bitcoin with Microsoft's corporate treasury or not, this will be determined on December 10th. Um, they argued, the National Center for Public Research, they argued that Bitcoin is an excellent asset, if not the best, hedge against inflation, and that at minimum, companies should invest at least 1% of its total assets into these cryptocurrencies. Interestingly, Microsoft's top shareholders include Vanguard, BlackRock, and State Street. Who decides what? Vanguard, BlackRock, and State Street will be deciding whether to buy Bitcoin with the treasury, corporate treasury of Microsoft on December 10th. BlackRock, as you know, they are selling Bitcoin ETH spot ETFs currently, and they've bought a lot of infrastructure, crypto infrastructure, infrastructures like Coinbase, Circle, lots of mining Bitcoin mining companies, and State Street already is ready to custody digital assets. And Vanguard, they don't sell Bitcoin ETH spot ETFs yet, but as you know, Vanguard is the major shareholder of Big Five Bitcoin mining companies. So, how is going to be the result of this? If they decide to buy Bitcoin, then Bitcoin will go to the moon by the year end of this year. 100K dollars, it's nothing burger. If they decide not to buy Bitcoin, well, Bitcoin will go to the moon no matter what next year, not this year then. That's what I think. Timing doesn't matter. But what really matters is mega corporations and every single person, especially rich people, they cannot help but to buy Bitcoin in the next 5 years, no matter what, including Microsoft, Apple, Amazon, Meta, and so forth. If you ask me why it's so much inevitable, please take a look at this article here. Circle, USDC issuer, Circle's Jeremy Allaire, CEO. He mentioned in an interview with Coindesk, stablecoins could expand by trillions in 10 years, will be integral part of global financial system. Stablecoin market could grow to $5 trillion to $10 trillion market in 10 years. That's what he argues right here. USDC as well as Tether will be dominant currencies in global trades, global payments, and remittances, including real-world assets. In the next 5 to 10 years, it is inevitable. What's more important is he said he envisions stablecoins, a type of cryptocurrency whose value is pegged to a conventional currency like US dollar or euro, capturing a 5% or 10% share of a global money supply of $10 trillion over the next 10 years. What does this mean? Currently speaking, global money supply, aka M2, is around $21 trillion right now. Every single currency on the globe is around $21 trillion. In the next 10 years, Jeremy Allaire, CEO of Circle, envisions the global money supply will be $1 trillion, which is 5x, comparing the current level of global M2. All the central banks around the world will print 5 times more money in the next 10 years. Can you grasp what this means? Global money supply from $21 trillion to $100 trillion in 10 years. US Fed is printing money. Chinese, all the central banks in China, Japan, European Union, and even South Korea, every single central bank prints money and will be printing a lot more money. Currently, it's enough, but it will be 5x in the next 10 years, according to Circle CEO. Not only financial institutions, but all those mega corporations, Apple, Amazon, Samsung Electronics, even Nvidia, those big companies, as well as billionaire investors, every single rich person on the planet, it's a must thing to do to buy Bitcoin against inflation. They will print 5x more money in the next 10 years. We can escape this type of danger, inflation, by buying Bitcoin or gold sometimes, but mostly Bitcoin. Even if Microsoft doesn't buy Bitcoin this year, that's fine. Bitcoin shall be a must-buy asset for every single person on the planet in the next 5 to 10 years, no matter what, because they will print money. And we need to protect ourselves from printing money, from deep appreciation of those dollars, euros, fiat currencies. So if Bitcoin goes to the moon, I think blue chip altcoins will follow next. Why don't we take a look at, consider just buying and accumulating more Bitcoins and even blue chip altcoins right now? Thank you for listening.